All right. It is early. That is for sure, but it is not early enough for the markets. Some markets couldn't even wait. They could not wait until market open to pump this thing higher. And the Qs are sitting here trading, I mean, almost above where they closed on Monday. They have unraveled that 2.5% pullback so fast, like they could not even wait. And we are sitting here waiting for the Nebius earnings. What is going on? Good morning. Oh, good morning, Nick. Good morning, Clip. Good morning, Ticker Tapper, and all the early comers over here. I apologize for the sound. Dude, I am so tired right now. It's not even funny, but I am pumped. Let's go. Let's go. The markets are ripping up. All right. We had more than a few earnings this morning. We have EOS is up 32% pre-market. Not only do they have earnings, but they also had an announcement and a partnership with Cerebras. Thank you very much for sending that over, Nick. Let's see if we can pull up the partnership with Cerebras News over here. 34% now. Holy cow. All right. Here we go. Freaking nuts, man. Freaking nuts. I would have seriously bought this stock pre-market, but I could not. That would have been a crazy trade. All right. Dude, this thing is going like $15. You know how many people sold out of their EOS recently? Like this is like one of those stocks where you shake an entire group of people out, and then as soon as they see the thing go back up, they jump back in. Like this thing is going to $15. All right. Frontier Power USA is expected to be a purpose-built independent development and investment opportunity utilizing EOS vertically integrated, whatever. 2 gigawatt hours firm capacity reservation agreement with Cerebras. All right. 1.5. Actually, no, this is just okay. So Cerebras 100 million commitment. That is basically your news right there. The stock is up tremendously pre-market, 30% pre-market. Now, if there is a stock that you think is going up today after the market opens, it is this one. Like, good Lord, this thing. Just look at this freaking chart, man. It's open. It's going to open above all the moving averages. And look at this compression of all of these EMAs right here. This is a stock talk setup. And I can't buy it pre-market. I don't know why I can't. It won't let me buy pre-market. It's all good though. It's all good. We are riding pretty high. Velo 3D. All right, guys. I should have taken this earnings lotto. I should have taken this earnings lotto. Look at that thing. It's up 24%. Did I not call that thing? Oh my goodness. Oh my goodness. Crazy. I hate how TradingView does this. There we go. Oh my goodness, guys. This is disgusting. I knew I should have taken this pre-market. I think there's probably someone in the crowd that took this lotto trade yesterday when I mentioned it. I bet you there's someone. If you took this lotto trade yesterday, please stand up. With a real lotto trader, please stand up. Tell me right now. I need to live vicariously through you. That thing is a monster. All right. Let me list these earnings from this morning. We have Nebius reporting bright and early in 11 minutes. Dude, I am so freaking tired. It's not even funny. All right. Alibaba, did they report already? I think they already reported. They probably reported like maybe a few hours ago. Wix. Oh, they're getting killed. Software stock. Global E up 6%. Tower Semiconductor is up 5%. Word? We Ride down 7% just by Uber. Dynatrace down 6%. Birkenstock. I mean, I own a pair of your sandals, but you are down 7%. All right, here's a stock talk pick. VLN Down 11%. All right, so everyone who wanted to FOMO into Stock Talks pick, it is now down 11%. And I could say that because he already publicly announced this. Down 11%. So if you're looking to FOMO in, as long as the thesis isn't broken, you get a better opportunity right now. All right. I'm not in this one, but I mean, you know, everything he touches turns into gold. So why not? Can't believe I didn't take this little trade. All right. It's all good. It's all good again. It's all good. Oklo reported earnings yesterday. They're basically flat. There's really nothing to report with that company. Velo beats their top line by 50%. That's why they're up. And on top of that, they raised their guidance. And on top of that, they beat the bottom line by like 80% or something. So that's the reason why they're up so much pre-market. On top of that, you also have Triple D here, 3D systems. So 3D printing is up. All of 3D printing is up. What about Stratus? Stratus is up 1.28%. So 3D printing stocks are up. So NVIDIA is $226 pre-market. Man, if Nebius doesn't print, I'm going to be pissed. Nah, just kidding. I'm not really going to care. I'm not really going to care. How much sleep did I get? 3 hours? Yeah, I got 3 hours. I got 3 full hours of sleep, baby. I am pumped. Let's go. Let's go. Oh, Steve got into Micron? He's probably the one who bid that thing up 10%. That dirty old bat. No, just kidding around. All right, let's see what's on CNBC. They've been playing this clip from CNBC for the longest time ever. I don't even know what this is. I don't want to play right now. All right, so we got some coverage here on CNBC real quick. So I'm gonna go ahead and play this for you.
Controlling stake in a for-profit subsidiary must begin to push for the idea that OpenAI become a division of Tesla. And they went down that road for some period of time. Altman said Musk's departure from the OpenAI board in 2018 was, in his words, a morale boost for some researchers. He said, I don't think Mr. Musk understood how to run a good research lab. So the back and forth continues, and we're going to see where this case ultimately goes.
And coming up, YouTube's takeover of media and screen time. The company getting set for its upfront presentation to advertisers. We're going to speak with a top personality on the platform about why it's dominating.
What's going on CNBC? Interesting. I got it down to Celsius. Oh, I thought you were saying Celsius is down. Speaking of which, where's this thing at? Wow, they're back at $23? Dude, was it everyone so bold up this thing when it was like 60? Crazy. I don't have any energy drinks here. I wish I did, but I'm so tired, but let's go. All right. Yeah, no, Celsius is like 52-week lows yesterday. This is definitely not a screaming buy. Not a screaming buy. So what do I see here pre-market? I see EOS 33% up, almost at $11. I see software down. Software down. Sandals down. Birkenstock is down. Yes, Rocket Lab is at 125 freaking dollars. Just killing it. Just killing it. Yeah, no, I know. I saw that, Nick. I saw that. Yeah. So this is software, right? This is software, so it's going to get hit below all the moving averages again. So yeah, that's the issue right there. That's the issue. I've said this many times, guys. Obviously, I'm bullish Zeta. I'm not adding to Zeta, but I am bullish Zeta. It's a position. I opened it. It is what it is. But this is your clear indicator of a software problem, not software as in like the sector software problem, not the company. So yeah, that's just the case here. Also, it's below all the moving averages of the market's at an all-time high. Like that's just not what the market wants. And you know, that's okay. And that's okay. That's okay. ServiceNow, same story. Same story at ServiceNow. Also Rubrik, which cybersecurity was getting bid up a little bit recently. But this is a much nicer chart for Rubrik. Yes, Cerebrus IPO, definitely. All right, we got 5 minutes. We got 5 minutes until the print. I'm trying to see if CNBC is no. CNBC is not playing anything important right now. I want to play something on the side right now because I do have to prep something. Let me see here if I got myself a clip. I'm going to get the Nebius open on the terminal real quick. Not a Bloomberg terminal, just a TradingView terminal. I'm going to get this open on the 1 minute chart and get that ready because we're going to have that print in 4 minutes. 4 minutes. Where is my Nebius earnings? And let me hide this. I'm going to add this screen here. Okay, so this is the prints from last quarter. This is last quarter. This isn't this quarter. This is last quarter. All right. This is that one pager that I'm looking for. So the current year-end 6 ARR guidance is $7 to $9 billion. So I would not be surprised if that's up. If this number is not up, then I don't think the stock is going to $200. Capacity guidance is good news, but that holistically is not going to be contributing to 7 to 9 billion raised directly. But you need to see this number go up. All right. This was the actual for last year, and then the ARR guide is basically taking the annualized run rate of the last month of revenue. All right. So I really don't think a lot of this matters except for adjusted EBITDA profitability. If they push up this guide for adjusted EBITDA profitability to like next quarter or something, we're going to 200. If they come in for Q2, 200. Dude, if they come in adjusted EBITDA profitable today, 200. 200. But yeah, this is going to be your number one saying here. Also, any deal that they come up with, but having a new deal with another hyperscaler or something like that would be contributing to the ARR anyway. So, or at least the any forecast they have for like next year or anything like that. But a deal would definitely push the stock higher. Honestly, I don't know what kind of news can materially bring the stock higher with Toloka, Triple 10, or Avride, because they've already said many times that these don't contribute dramatically to their top line. ClickHouse, well, they don't really have power over that valuation that's based in indie rounds. But I think, yeah, right now it's like $15 billion. But yeah, you're looking for a raise on this number. So a new deal would contribute to a raise or anything like that. And adjusted EBITDA profitability calendar's pushed up. That's what you're looking for. We got 1 more minute, guys. 1 more minute. There we go. Of course, glad to cover it for you. EOS is up 34% pre-market. Wix is down 14.5% pre-market. 19 seconds, guys. 19 seconds. 19 seconds. Let's see if we can get an all-time high close on the NASDAQ and hopefully an all-time high close on Nebius today. We have 2 seconds. Here we go. Nebius is at $1.90. I mean, 190. I can't find the earnings yet. Jesus, I need to make this thing small. Wow, 194. The all-time high was 197.89. Up 8% pre-market. I don't see the numbers yet. Let's see what happens here. I don't see the numbers yet. Nothing. 194.80. I don't see the numbers yet. It's definitely up. Okay, a new pre-market high. 195-ish. All right, Nebius numbers are out. I don't know if this is true or not. Nebius numbers are out. Revenue up 622% year over year. EPS up 41%. I don't know if these are right. This is a post on Twitter, so I cannot confirm yet. I cannot confirm. Fox Runner is pinging me right now. What is it doing? 197. 197.62. Can we get 198? Can we get one? All right, earnings are out. Let's go. Let's go. All right. Hold on. Let me pull this up over here. Four gigawatts of capacity, on track to deliver 7 to 9 billion. So they did not raise. Let me share this tab. All right. That is not the tab. This is the tab. All right. 193. Okay, so 4 gigawatts capacity raise. So they raised their guidance for year end 2026 by about 1 gigawatt. So that's good news. Foundational partnerships enables build out largest deal, a $27 billion deal with hold on. Is that new? I need to double check that one. On track for $3 to $3.4 billion of revenue in 2026. Okay, so I think that's the first time they actually said how much revenue they expect to have by the end of the year. So $3 to $3.4 billion for revenue by the end of the year. So this isn't ARR. This is how much they're going to make in 2026. That is the first time we've gotten that number. The stock is $190 right now. Nebius core business, 841% year over year. So that is an acceleration, 82% quarter over quarter, 390 million. So right now they're about a $4.8 billion ARR. Something a little bit less than that, $4.68 billion. $9.3 billion in cash from a capital raise. This is how much they raised funding in the first quarter, so that's nothing new. They more than doubled their autonomous fleet. Revenue grew 10% year over year for 1010. Stock is $193. All right, so I'm gonna do this real quick. Let me see if there's anything on the wire with CNBC. Stock is $192. So we are holding on to these gains, baby. Yeah, they already mentioned this one. They already mentioned this stuff, $2 billion investment. We already knew about that. So they did not raise. On track for 40% adjusted EBITDA margin. I believe that's the first time they mentioned that 40%. Yeah, they said positive adjusted EBITDA. Now they're saying on track for 40% adjusted. So that's adjusted, guys. Adjusted, right? They're taking out a lot of stuff in there to get that number, but they didn't push up that forecast. They're still saying it's in 2026, but they did not say by Q4. They said in 2026, so it could be earlier. $197 pre-market. On track for $7 to $9 billion ARR. We're at a new high pre-market. $3 to $3.4 billion in revenue. 199 pre-market. Let's do it. Let's do it. Come on, let's do it. You can do it. You can do it. You can do it. You can do it. Yes. $200 pre-market. Let's go. Let's go. Your boy needs to go to sleep. Your boy needs to go to sleep. Your boy needs to sleep, baby. Woo! Woo! Let's go. This is literally just a bar and a number printing on my screen. Sam, why are you getting excited about this? It's just a number. It's like, what? Why are humans built so weird? It is a number on a screen, but I'm getting excited. Like, it's just, I don't know. Guys, when I'm tired, I think of the weirdest stuff ever. I got my Nebius attire right here. I got my shirt. I got my hat. These people sent me this gear. Thank you very much, Peter from Nebius. Thank you very much, Nebius in general. Thank you very much. Let's go. Let's go. All right. I'm going back to sleep. I'm just kidding around. All right. I'm going to post these, put these numbers over here so I can post it on Le Twitter. There is absolutely nothing on CNBC for this. Absolutely nothing. The shame. The disappointment. Your guys disappoint me. This is 211? Oh, I don't see that in mine. Okay, back below 200. Let's see if this sticks, guys. Let's see if this sticks. I don't see anything. I don't see any 211 here. I don't even see anything on CNBC, man. It's nothing. Disrespect. The utter disrespect, Nebius. I mean, CNBC. Flowers. Yeah, dude. Man, I was talking about this thing for a while, but I have to admit there are a couple guys that are before me in that one, but I have been talking about them pretty early. That was like during the Substack days on Mitch channel and stuff. So congratulations to you guys for hitting the buy button. I didn't do anything. I just told you exactly what I felt about a stock, and you guys are the ones that bought it. I didn't buy it for you. You bought it. So pat yourself on the back. Pat yourself on the back. Man, these numbers are pretty phenomenal. I mean, don't get me wrong. Like, these are really good numbers, but I do wonder if this is new. I'm trying to find this out. $27 billion. Like, what does this mean? I would like to know what this means. Back above 200, baby. Oh my. I told you this is $15 right here. This is going to 15. EOS is up 43% pre-market. This is going to $15, guys. Tower Semiconductor is up 10% at a new all-time high. Global E is at almost $33. This is your e-commerce game for, I think it's like somewhere in Israel, Middle East or something like that. They definitely priced this back. Wow, Nebius is up 13%, a new pre-market. At least that's what I see for mine. My goodness. And the market is not even higher pre-market. Guys, they haven't even, the show just started. Marvell Technology is up 2.2% pre-market. Wow. Wow. A new pre-market high. $5 million. Nebius is going to be a $5 million number price target. I don't know. I have no idea. It's difficult to make a prediction. I mean, it's above $200. It's above $200. So I made you a lot of money. Yeah, dude, you hit the buy button, not me. Congratulations to you. I didn't make you money. You made yourself money. You hit the buy button. But you're welcome. I'm glad you are finding the words coming out of my mouth bullish. and convincing. But you hit the buy button. You did well, sir. You did well. IREN is also a pre-market. IREN is up 2% pre-market. What are the other things doing? Amazon is up 21 basis points. Tesla's up 1%. Yeah, this is like a freaking party for semiconductors today. Like Intel is going to be making the chips for the Google Book, the new AI first laptop from Google. They're going to be making those chips. Navitas is up 7% pre-market. Okay, so we have Nebius is at 203. I believe that is a new pre-market high just printed, up 14%. Congratulations, guys. You guys hit the buy button. You guys hit the buy button. You made the money. You made the money. I'm just a personality on YouTube, just talking my ASS off. We got a new pre-market high, almost 205. Yes. Hit the like button, guys. Hit the like button. Solid report. Make sure you're liking, subscribing, and turn the notification bell on, sirs. Yes. Oh, baby, we are pushing higher. 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 Oh, man. That's crazy. Okay, I think that $27 billion deal is new. I don't see anything on that, on the previous stuff. But I don't want to post it on Twitter because I don't know if it's confirmed. There's nothing about that on the previous ones. I don't know what it means. I don't know what it means, but I would imagine that that is the reason why it's up a lot higher right now. So I don't call me skeptical, guys, but I don't know what that means. But I can't complain. It's a $204 stock right now. I cannot complain. Cannot complain. All right, hold on. I want to see something over here real quick. Is there anything on CNBC? They're talking about a firm right now on CNBC. My guy, why are we talking about fintech right now? We have data center, the most important thing right now being talked about. Not a firm. Not a firm. It's all right. It's all right, CNBC. Guys, when I'm tired, I talk out of my arse a lot. 3.24%. Ooh. I just had to do something real quick. All right. So let me bring these numbers up again. These are beautiful numbers. Yo, these guys at CNBC are like on it very early. I don't know if it's too early for them. Do I like Arista Network? I did discuss this yesterday. I do like the company. I do like the stock. They're a very profitable company. Why it was below its 200-day moving average, I don't know. But to be honest, they are eating this thing up. So I'm not in it. No, tomorrow. Yeah, I know. I think it was old. Is that Chris Patel or is that just someone that happens to have Kate Patel? I don't think it's Chris Patel. But welcome. Welcome, sir. Yeah, I know. That's what I'm thinking because I was looking at the previous earnings. So I don't think that's new. I do want to know though. I mean, I'm not going to complain. It's up like 30% pre-market. Not going to complain, but I do want to get some clarity on a couple of things here. I want to get some clarity on when they expect the 40% adjusted profitability margin. They don't clarify that here. And I also want to hear more about this $3 to $4 billion revenue. That's the first time they've said that. They've never said that before. They've only said $7 to $9 billion ARR. They've never said the amount of revenue they expect to get. But these numbers are good. I mean, you know, you have to expect these numbers if they're getting to $7, $9 billion ARR. We're teetering on $200 right now. But you can't expect the thing to go up in a straight line. Let's see here. They're still talking about a firm. Come on, guys. Come on. Let's go. I got to post something real quick. Here we go. All right. Well, there goes all that energy. There goes all that energy right there. I'll tell you something. I should probably just like cut the stream or record me sleeping for the next 43 minutes until the earnings call. I mean, we can definitely dig into these numbers more. I'm just trying to, let's go over the, all right. I love this picture. This guy's the freaking man. All right, below $200 pre-market. We continue to see unprecedented demand across the market. Compute and cloud needs are vastly exceeding capacity as more industries embrace AI and companies move beyond experimentation to real-world application. We are seeing this demand firsthand and are capturing it with our full-stack AI native cloud. We are a technology company at our core. We have world-class engineers and deep proprietary expertise across every layer of the stack, from infrastructure and multi-cloud through inference solutions and agentic platforms. That's a lot of hot words right there in just one sentence. All right. Consistent execution drives strong financial results. ARR grew 674% year over year, while revenue accelerated both quarter on quarter and year. Our deepening customer relationships are strengthening our unique position to serve industry-wide demand for both compute and cloud industries services. All right. Nearly double it's okay to 45%. Adjusted EBITDA margin is 45%, a testament toward our 20 to 30% EBIT margins. Okay, so that's different. 20 to 30% EBIT margins. They're giving like actual numbers here, which is good. Not just saying it's profitable, whatever. Like they're giving actual margins. So they are heading toward 20 to 30% operating income margins. They don't give a timeline for that. They just say 20 to 30%. So that's pretty good. That's like mega cap status right there, especially for a company with like almost $8-9 billion in ARR by the end of the year. They don't give a timeline for that. They just say that is their goal. All right. So 45% adjusted EBITDA margin. Strategic acquisitions, acquisition and Tavily. All right, we already knew about these. All right, so I've been saying a lot that they are always mentioning the token factor. Okay, they're always mentioning tokens. That's a common topic amongst a lot of companies. So let's think what has to do with the tokenization. Not tokenization. Let's think what has to do with tokens. Inference. All inference. They're all saying inference, and that is the reason why my portfolio has what it has in there. All right. They already mentioned this, 3.5 times quarter-on-quarter pipeline. Owned capacity, contracted capacity already exceeds. Okay, so they already contracted 3.5 gigawatts. They're expecting 4 gigawatt by the end of the year. They already contracted. Their previous guide was 3 gigawatts. So they're already ahead of it. So they're getting a lot of good deals. We have now secured 2 gigawatt scale sites in the U.S. We broke ground in the Missouri location yesterday. Today, we're announcing. Okay, so they have a new site in Pennsylvania. 1.2 gigawatts. We expect capacity significant in Q3. We landed a second large agreement with Meta. I don't think this was said before. I have to search Twitter. Yeah, you're right. They said okay. I found the post. I forgot about this one. I found the post. $27 billion contract with Meta. They announced it on March 16. That's actually when the stock jumped up a lot higher. Okay, so that's not new. I mean, don't get me wrong. I like the stock up 13%, but I'm trying to decipher the key details of why it's up so much. It's probably because of the revenue guide instead of the ARR guide. It's the first time they're actually giving tangible revenue for the end of the year, and the adjusted EBITDA margin right here, 40% adjusted EBITDA margin. They don't say the quarter. So they went from wording Q4 to just saying in 2026, which might mean it's sooner, but they don't want to they don't want to confidently say that yet. All right, so we already knew about the $2 billion investment from NVIDIA, $9 billion of cash. We plan to deploy this cash. Actually, the good part too is that they didn't announce any raise, but they're probably going to announce raising capital tomorrow or the next couple of days. So I wouldn't be surprised if that happens, guys. So if they come out with like a $2, $3, $4 billion raise the next couple of days, like it is what it is. You have to expect that. You can't come here and not expect that. All right, let's dig into the rest of this. Nebius. All right, we got more details about their business. I'm just trying to sim through this real quick to see anything that's new. Okay. Capacity growth. In Q1, we expect significantly increase our capacity in Q3. That's a big news. We expect connected power. So they expect to have almost 1 gigawatts of connected power by the end of the year, like actually built out, not contracted, like built out. They announced the Pennsylvania one, expected 1.2 gigawatts of power. That's why they raised their guidance. Contract capacity 3.54 by year end. Nick just sent me something. Okay. Thought that was something else. Thank you, Nick. I'm trying to look through here to see if I find anything new. They're talking about their customers. Okay, so $27 billion, $12 billion. Okay, yeah, we already knew about that one. Avride. The team has already more than doubled the size of AV-capable vehicle fleets versus year-end 2025. So in the first 5 months of the year, they doubled their fleet for Avride. Robot deliveries increased 178% year over year to 174,000 and surpassed 500,000 since inception in April. Good news. Good news. Yeah, we already knew about that. Uber Eats, Uber. Hold on. Something just. Tower Semiconductor. Oh, this is the one Nick just sent. Hold on, I got to post something real quick. Tower Semiconductor is up 11% pre-market. Am I in the wrong thing? Okay. Triple 10 revenue growth 10% year over year in Q1. So that's growing pretty nicely. Triple 10 is basically like their online language. I'm sorry, online learning platform for engineers, anything to do with AI. So they're still growing that. It's more focused. I've mentioned this like last year. They're more focused in growth in Latin America right now. 10% year over year. Not bad. Q1. Equity stakes. In addition, core business, we own equity stakes. Okay, we already knew about that. Do they say anything about it? Okay, they don't really talk. We no longer. Oh, as of Q2. Oh wait, we already know about that. Okay. Here we go. Yeah, still $15 billion. The revaluation of equity stake following a gain of $781 million. Interesting. Okay, so 3 months ended, revenue is $400 million, 684% change. Yeah, so they're already a $2 billion run rate. So what they're doing is they're taking March, they're multiplying by 12. Cost of revenues increase. See, this is good. Their revenue outpaced their cost. That's exactly what you want to see. That's exactly what you want to see. Product development expenses, sales, SG&A. Q1 revised their useful life. Interesting. Oh, wow. That's going to reduce costs. So now they're expecting the lifespan of their servers and network equipment of 5 years. That's a longer depreciation schedule. That's lowered expenses. That's good. So they are adjusted EBITDA profitable this quarter. 32%. There's going to be a quarter in here for next couple of quarters where it's going to be lower. Unless they're just always at 32 and going higher. We'll see. But 32% is a monster beat. $2.5 billion last quarter they spent, and they have $9 billion in cash. Maybe they don't raise. Maybe they don't raise. That'd be crazy if they don't raise. That's it. That's it. Nebsta. Trying to see if they're saying anything on CNBC with Nebius. It's like absolutely nothing. The disrespect, guys. Disrespect. Yeah, CNBC should be all over Nebius right now. How dare you? How dare you? I'm just kidding around. They don't need to do it. That's why we're here, right? No, they're going to dilute. They're going to dilute. You have to be delusional to not think they're going to dilute. They're going to dilute. Okay? They're going to dilute. The next 48 hours, they're going to dilute. Their stock is up 13%. They're going to look at it and be like, damn, we need to raise some money right now. All right? So don't be surprised. Don't be surprised. Don't be surprised about that one. All right. That was a beautiful price target raise from Marvell Technology. So I posted about this one this morning. Appreciate it, Nick. This is a beautiful raise. So Bank of America is one of the best sell-side firms out there. One of the most reputable. They have a buy rating, and they basically increased their price target by 60%. And they didn't mention anything about the Google TPUs, right? This is a $200 stock. Marvell's up 2.3% pre-market. EOS is up 30%. Wix is down 15%. Birkenstock is down 7%. Tower Semiconductors up 13%. Damn. We're above $200. Okay, so this TAM increase in price target raises the TAM increase. It's basically everything to do with AI networking and also optics. So they're very bullish optics for Marvell. The gang is on. Why aren't you with them? Because I'm not. I'm just not. I wanted to host my own show. And that is okay. Let's see here. Let me put on some CNBC real quick.
As we speak. We're coming right back.
Back to commercial. All right. So we went through that. I mean, you know, the earnings are exciting. I don't know. Was there really anything new in the earnings other than just excitement? I think the biggest thing from these earnings is the announcement of the Pennsylvania data center, 1.2 gigawatts, the new site. The increased contracted capacity. They have an increased contracted capacity, and also on top of that, capacity guidance is where is it? Capacity guidance is raised to 4 gigawatts. I think that it's because of this. Okay, so now whatever estimates Wall Street saw in terms of actual revenue by the end of the year, now you have the number, and it's probably going to go higher in the next few quarters, right? So, and they also gave this, and they also said in 2026. They didn't say when. Now, if they expected it by the end of the year, they would have said Q4. They would have reiterated it, but they didn't. They said 2026. So this might happen earlier. And I think that's the reason why the stock is up 14%. Are we about to make a new pre-market high? Are we about to make a pre-market high? Go. Go. Ah, all right. Oh, the pre-market high is 206. All right. Appreciate it. I love that you're here. Okay, so let's take a look at EOS. They just gave up 20% of gains. Interesting. I thought that was going to $15. EOS. Do they have slides? Do they have anything beautiful for me to look at? Or it's just... Yeah, just the press release for now. They're probably going to come out with slides later. All right. EOS Energy, $57 million the first quarter, 445% increase. They are a $2.75 billion company. So that's pretty strong numbers. What are they guiding for? Adjusted gross loss excluding stock-based compensation. So they're actually profitable on an adjusted basis. Not bad. Gross loss was 44 million. So they increased revenue faster than their losses. So full year guidance, $300 to $400 million. So if the stock is up 10%, 23% pre-market, and it's a $2.775 billion market cap. If I was trading this, I would have been out of it by now. Because I was looking at trading it pre-market at like 950. And then I would have taken part of it off at like 10% higher. And then I probably would have stopped myself out of the rest. So that would have been a good trade, but I could not get in for some reason on my brokerage. So they are a $2.75 billion company right now. And they're up 26% pre-market, so 1.26. So they're a $3.4 billion company right now, and they're anticipating on the top end of the range of full year $400 million. So divided by 0.4. So they're trading at 8.6 times price to sales. Well, maybe that's not a $15 stock. That's expensive. But you are growing 445% year over year. It's pretty expensive. I don't know. Growth stocks be growth stocks. Growth stocks are growth stocks. Yeah, so their EV sales forward is 14 right now. So that did re-rate them higher. The price of sales forward is 9. So that's before they jumped up and before their earnings. What's Navitas at? Navitas is trading 100 times price of sales, but I think that's because they're seeking alpha is messed up. All right. EOS earnings. Oh my goodness. Let's go. Hit 210. I love it. I love it. Where is it? Hold on. Wow. Wow. Oh my goodness, guys. Oh my goodness. Holy cow. Wow. That's crazy, guys. That's nuts. That is nuts. I haven't even looked at my brokerage account right now. I should. But I haven't looked at it this morning. Wow. Guys, that is nuts. Holy cannoli. Utter disrespect, CNBC. Disrespect. How dare you? How dare you not talk about a $50 billion company on your channel? How dare you? PFF, FFFFFF. What? What are you talking about? What is that? Pfizer? What are you talking about? There's a little bit of lag between the chat and what I'm saying in the stream, so I'd imagine you're going to say it soon. All right, CNBC is back. Why? Why? It's all right. Can't catch them all, guys. Can't catch them all. I've done that before. I didn't do it this one, that's for sure, though. All right, let's play CNBC real quick.
Secretary of State, and going to break. I said, I think you were in the Nixon administration, and I said, no, that can't be right because you're still a young man. But now you tell me, you were 24 years old. You were part of, I guess, the Nixon contingent that met with Mao Zedong.
I didn't go on the Nixon visit, but
you were working with Kissinger, right?
I worked with Kissinger and did a lot of the planning on the economic stuff for the Nixon visit, since I was Kissinger's economic advisor.
I always say when I was alive for these things, I did not realize that Nixon actually, that Mao was still around.
Mao was still around. He was in his 80s, but still quite knowledgeable and thoughtful. And Nixon and Mao had actually some very good conversations. Kissinger, Joe and I did a lot of the planning for the meeting, but Nixon himself wanted to go. He'd been a strong anti-communist, but he also realized that China was a rising power and the United States had to have a relationship with them.
That was a major thing that Nixon did that is causing, I think, his entire narrative, historical legacy to be revisited, or at least it should be, because that was so monumental.
Monumental, and it was Nixon and Kissinger who decided. It was not a popular thing necessarily in the U.S.,
right?
But they realized that this was a rising power, and now, years later,
now we know.
Now we know, and for the first time in nearly 100 years, the United States is negotiating with a peer great power.
Kind of.
Peer great, in many areas, not every area, but certainly from a military, political, economic, and technological perspective, they're the most broadly based competitor and most advanced competitor we've had to deal with in many years, and they have that sense of confidence.
How many people died in the
in the Great Leap Forward?
Yeah.
20 to 30 million people starved.
No food. So that was my point, and what I was getting to with Mao, I'm not an admirer. I'm sorry. People that have a picture of Mao on their desk, I think they have a screw loose. And I was going to ask you whether President Xi is different fundamentally in his view of what he wants to bring to the 1.4 billion people that live there than I don't know what Mao was thinking. I think Mao wanted to make China preeminent, and I think
definitely.
And I think she wants to do the same thing. Is it sometimes at the expense of
well, that's
Chinese
a very
people?
good question. Mao had two major preoccupations. One, he kept referring to the fact that we were bullied in the last century by the foreigners because we were weak and divided, and they'd had a civil war, as you know. And second, both he and Xi, but particularly Xi, did a lot of work on why the Soviet Union fell apart. And Xi concluded that it was because the party had gotten weak, they'd become too dependent on a few commodities, particularly steel and energy, but not a broadly based economy. They only had a very few trading partners, and they were vulnerable to the U.S. Xi wants to create a situation where none of those happen. He wants to diversify his markets and his supply chain. He wants to avoid being bullied by foreigners. He wants to make sure that when he does something, he has a united party behind him.
What's all that mean for what President Trump tries to do?
It means that when President Trump goes there and asks for something, Xi will come back with a lot of confidence that China is an equal or close to an equal on technology and other things, and will stand up to him and has leverage over the U.S. It used to be that foreigners had leverage on China. Now, for the first time, China has leverage over foreigners.
But just how much is I think, a question. So personal GDP in China, $14,000.
Oh, much lower.
Personal GDP in the United States is $90,000.
Much lower.
My point was that.
All right. Disrespectful. I'm never going to forgive you for this, CNBC. I'm never going to forgive you. How dare you? How dare you? I'm just kidding. All right. So nothing really great on CNBC. They have the former Secretary of State on there. I wanted to pull up VLN earnings. I can't really decipher what that stuff is. I'm not in it. But again, I mean, VLN is down 5% pre-market, right? So if you wanted in this and you're feeling FOMO yesterday or the other day, then, you know, as long as your thesis is intact, then, you know, and you wanted to pull the trigger, then now's your opportunity, right? So that is that. And Novio reports earnings after the close today. I have a small lotto position in Novio. We'll see what happens. I believe mRNA, Moderna reported earnings pre-market. They're basically flat. That Hana virus, whatever it's called, people ask me, am I worried about it? No. I mean, yeah, I don't know if people are getting impacted by it. You know, kudos to them. I'm not trying to be heartless, but I'm assuming when they're asking me, am I worried about it from a market perspective? No, I'm not. Guys, we were so unprepared for COVID, and today we are very prepared. It's fine, right? And if that ends up being very bad, then I guess I was wrong, but it's fine. Tower Semi, almost 20% pre-market. I was going to get in this one too when it was like $1.60. I did not. That's fine. I don't need to get in everything. I don't need to get into everything. Their slide isn't, their slides are not even on their website. My Novio thesis is basically thinking that because they're one of the first companies to have a trial against the vaccine, that it was going to ride up. But if this virus doesn't end up being a scare, then it's probably going to go to zero. That's fine. It was like 20 basis points of the portfolio. So that's why you size them small. Now, if I did a 20 basis point bet on Velo yesterday, that would highly contribute to the revenue of Mr. Samuel Jackson on the stream, but I did not. But it's okay. It's okay because my guy, the revenue is definitely going higher right now. That's for sure. That is for sure. I can't believe, like, I knew it was going to be above $200 at some point, but I can't believe it's above 200 right now. So when IREN posted their earnings, that pop lasted for like not even 15 minutes, and it faded very quickly. So what happened with IREN earnings? This was not an issue with the earnings. They got a $2 billion investment from NVIDIA. They have a 5 gigawatt partnership with NVIDIA, right? And also, they gave some higher guides. But the biggest thing about this was they're going to raise funds, which they did, on top of the $6 billion right to dilute, right? So I don't understand why the market is bearish that, because like that is clear and obvious that this business is a very high CapEx business. Okay. Very clear and obvious. So why did it fade that entire thing? I don't know. I'm not in it. You guys already know I sold at $45. So, you know, I'm missing on these gains, and that's okay. We made a new pre-market high. No, we did not make a pre-market high, but that's the reason why that sold off. And they had a convertible senior note, like just Monday, they announced it. And then they oversized it, $2.6 billion yesterday. And the market's like, oh my goodness. It's like, what did you expect? What did you expect? You think that they're done? I'm telling you right now, Nebius is going to have one too. Do not be delusional to think that these guys are not going to raise more capital. They are looking at their stock price and they are salivating, saying we need to raise more money, because they know their stock is going to be higher later. So they want to raise the money now while the stock is in hyperbolic state. That's when you raise money, right? So don't be surprised if they come out tomorrow with like a $4 billion crazy raise, okay? Do not be surprised about that. So let's see here. I'm trying to print out this Tower Semi earnings. That's a good stock. Tower Semi is an amazing stock. It's up like nearly 50 freaking %. So Tower Semi is at 262 pre-market. They're, oh, no wonder it's not posted on the it's not posted on the website. $410 million is a revenue estimate, and adjusted EPS estimate is 0.55. Wow. Thing is pushing higher. Tower Semi, guys. Overlooked while everyone focuses on AAOI, guys. There are so many better photonics plays than AAOI. AAOI is one of the riskiest ones, but there are so many other photonics plays other than that that have way less risk. One second. Posting something real quick. Where is this? Tower Semi is almost up 20%. That's crazy. Dude, Wix is getting killed. Wix is down 15%. Man. All right, so we got the earnings call in 5 minutes. Let me see if CNBC. Oh, wow. They arrived in China.
with President Xi Jinping of China, along with many U.S. CEOs.
Guys, it's they have like a rock star team on that flight going to Beijing. You think he's going to come back with bad news? You think he's going to come back with bad news? Like, this is the most bullish trip ever. This is the most bullish trip ever. You think he's going to come back with bad news? I don't think so. I certainly don't think he's going to come back with bad news. I think he's going to come back with very bullish news. President Trump is going to China. Elon Musk is going to China. Jensen Huang, they picked him up in Alaska. They stopped in Alaska and picked up Jensen Huang. They said, Jensen, get on this plane right now. Tim Cook is on the airplane. Larry Fink is on the airplane. Steven Schwarzman is on the airplane, CEO of Blackstone. CEO of BlackRock is on there. Kelly Ortberg, CEO of Boeing, is on there. Brian Sykes is on there. Jane Fraser, CEO of Citigroup. Larry Culp, CEO of General Electric. David Solomon, CEO of Goldman Sachs. Sanjay Maroda, CEO of Micron, is on there. Cristiano Almen is on there. Like, guys, he's not going to come back with bad news. You're going to see some crazy news in the next 48 hours. This is the most bullish event ever. Like, come on. You don't short the stock market. I don't know. This is the most positive event ever. All right, we got the Nebius earnings coming up soon. Wow, Fortune Power Solutions is at a new all-time high pre-market. Crazy. Yeah, guys, this is the most bullish event ever. Okay, so let me prep this. Let me prep this.
But no, because I think people want to understand what kind of multiple they should be trying to apply to this. What are the other sort of comps out there that look like your company?
Yeah, it's a great question. So how it works, we drill really deep wells into hot geology where we can actually produce steam that generates electricity. So it's a 24/7 carbon-free energy resource. Maybe relevant to the comp question, we did not invent the concept of geothermal. That's been around for 100 years. There's a lot of companies doing it already. But traditionally, it's been limited to really unique geologic conditions. What we do, we drill a lot deeper. We drill horizontally. We apply technologies from hydraulic fracturing that actually unlock way more geology all across the country. So that's why geothermal can be a much bigger piece.
Fracking for hot water.
It's very similar to that, and that's cool. It's sort of that technology trend that has allowed us to
cheaper than drilling for
move so quickly. It is in a lot of ways, and
the end result is energy that how does it compare to existing types?
Yeah, the end result is 24/7 carbon-free energy that's very reliable.
Whether it's carbon-free or not, I really don't care. But
it's at a very
how much does it cost?
It's a very attractive cost. We have taken our CapEx from about $7,000 a kilowatt down to $5,500 a kilowatt in the last couple of years. That's already a price point where we're starting to be at parity with other forms of energy like natural gas. And we're on a path to get down to $3,000 per kilowatt.
Setting up the call right now.
Natural gas?
That's right. And we have immense customer demand now because there's huge demand for electricity, and we've gotten the cost structure for geothermal down to a point where it's really starting to take off. And that's really been what's changed in our sector in the last few years. That wouldn't have been
an all-in energy plan for the United States. This would fit in, obviously. If you get to what did you say, 3,000?
3,000. Yeah.
And my question is, is there a moat around the business? Can others do this? Obviously, others are doing things like this, but maybe not exactly the way you are.
Right. There's a lot of things that build up our moat. One of the first things we did, I'm from Texas, grew up, seeing all of the icons of the oil and gas industry before me. And one of the things you learned is you want to have a great landman and you want to really move toward and get that great resource early.
Right.
And so we have 600,000 acres of the best geology for geothermal in the Western United States in our portfolio. That's very unique to us. In addition to huge technology innovations we have protected through patents and other areas, that's what gives us such a strong first mover advantage in this field. And that's really resonated with investors over the last few weeks when we've been on this road.
Look at it. Oh, God. ESG. And it's not ESG, it's EGS. EGS, a new category, which stands for Enhanced Geothermal Systems. That I can buy into.
But that's what I was going to, but I was also going to just ask you about how you think about, dare I say, the issue of climate and where you sit in that relative to everybody else. And also,
you mean the weather outside? What?
Climate change.
I have the
Climate change. The world is stopped because the Strait of Hormuz is closed where all the oil's coming through. Just live in the real world.
Let the guest answer the question.
Okay, you're still beating that horse. All right.
Here's how we've always thought about this. Whether you're motivated.
So I have the earnings call playing in my ear right now. They have not started yet, so I'm basically going to switch over it as soon as it starts. So for right now, I'm just playing CNBC.
And what's great is we have a technology that stands on its own unit economics, and the fact that it can address climate change is a bonus on top of that.
Right. Okay. Tim, thank you.
Thank you.
If it was based on that, it'd be a tough time to be in business, right? Yeah. Given the way the world has turned. President Trump arriving in China. Eamon Javers is going to join us live from China. I guess right now or whenever it does happen. We're going to break. Oh, we are. We're going to talk to Eamon. Eamon, that's pretty pompy and circumstancy, isn't it? I'm not that disappointed.
It looks very pompy, I would say. I mean, this is the arrival, and this is what we're going to see here is just sort of a pro forma arrival, right? The president is going to shake hands with the vice president of China, the ambassadors from each country, and then he's going to get in the limo and go to the overnight. So this is not the big official Xi Jinping greeting. This is, you just got off a long flight. We're going to let you get to your hotel room and get a little bit of sleep. Even on Air Force One, it is a long flight. The president, of course, gets a bed. Everybody else on Air Force One gets a chair. So a lot of those folks are going to need to get out and stretch their legs a little bit, maybe get a couple of winks before they get down to the serious business. So this is sort of a preamble, but this is officially Air Force One on the ground, and we're about to see the president of the United States in China for the first time since 2017, for the first time in this term of his presidency, of course, and with so much at stake, guys. You've been talking about it throughout the morning. Obviously, the trade war truce that the two sides agreed to in Busan back in October, a lot of expectation and hope in the corporate community that that truce can be extended for at least another year. Also, add to that the complexities of the Iran war and China's alliance with the Iranian government. The real question here on the ground is, to what extent has the Chinese relationship with the Iranian government been impacted by the leadership decapitation strikes by the United States and Israel during the course of this war? A lot of the people that the Chinese dealt with were among those who were killed in those strikes. We've heard the president of the United States say that that's been a problem for the United States in terms of communicating with the new leadership. It may also be a problem for the Chinese in terms of communicating with the Iranian leadership as well. So the president's going to want to get a fix on that and see if he
statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Form 20-F, which has a list of our risk
We're at a new
factors.
high pre-market.
We undertake no obligation to update any forward-looking statements. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website, located at nebius.com. And now I'd like to turn the call over to Arkady.
Thanks, Gilly, and welcome everyone to our call. We have had a great start to the year. We're building an AI-native hyperscaler, and I would say we're developing it across 4 dimensions. The first is capacity and scale. Second, product and functionality. Third dimension is customers and demand. And finally, capital, our 4th dimension. All of our focus is on execution across all 4 of these dimensions. Let me put our results of the quarter in this context. First, on capacity. As you see, we are building big. Last quarter, we told you that we already contracted more than 2 gigawatts of power while targeting more than 3 gigawatts by the end of the year. 3 months later, today, we have already contracted more than 3.5 gigawatts, and we are now targeting at least 4 gigawatts of contracted power this year. Today, we announced a new site in Pennsylvania to support 1.2 gigawatts of power once fully lit live. This is our second owned gigawatt scale site in the United States. Our platform is most efficient when we own the full stack, and we are building towards that. Our owned contracted capacity now accounts for more
he
than
sounds very
75%
excited.
of our total power. But more importantly, we continue to build our full stack platform, and this is our second dimension. What does it mean? It means we don't just offer compute, we offer cloud services. Services that span across the AI lifecycle, from bare metal to multi-tenancy to inference to agentic and more. And we have made significant progress on that front. And it's not just developing our platform and launching Esther version 3.5 this quarter. Our 3 acquisitions this year, Tavily, Eigen, and Clarify, demonstrate the uniqueness of what we're building. All 3 companies bring industry-leading engineers and researchers to Nebius. Eigen AI and Clarify strengthen our inference optimization solutions. Eigen was recognized as the #1 speed inference provider by NVIDIA. While Eigen optimizes at the model level, Clarify optimizes at the system level. And they both strengthen our in-house token factory offering. We also acquired Tavily earlier this year, extending our platform reach to agentic search, an increasingly significant part of the market. This acquisition brought us rare capabilities of what this new class of developers need. We also expanded our technology partnership with NVIDIA. We again achieved NVIDIA Exemplar Cloud status, this time on our GB300 for training workloads. We're among a small group of providers to achieve this status across multiple GPU generations. At our core, we're a technology company. We have top AI engineers and deep proprietary expertise across every layer of the stack, both hardware and software. We're quickly becoming a magnet for top talent. We're happy with our ability to enlarge our offerings through strategic acquisitions. Our clients appreciate the full extent of our offering. This is not common in our market. This is our strength, and this is our uniqueness. And we believe this is what will enable us to win. Demand is our third dimension, and it continues to be increasingly strong. But more importantly, our full stack platform allows us to capture and service a large and diverse range of hundreds of customers, not just several big bare metal off-takers. Our pipeline generation in the first quarter grew 3.5 times over the fourth quarter. And this is a record for us. And the demand is broadening across industries. Today, we typically see several customers competing for every GPU we bring online. We're building to support this demand with scale and discipline. New customers across a number of use cases are using our full range of offerings to solve their most challenging problems. For example, European fintech leader Revolut recently began using our token factory. In physical AI, 1X Technologies is using our cloud platform to build general-purpose robots. In life sciences, our cloud platform is enabling startups to build more powerful models that accelerate drug discovery and advance the fight against diseases in ways that were previously impossible. And beyond technology sectors, larger companies in industries such as manufacturing, energy, heavy equipment, and pharmaceuticals are increasingly engaging with us. Demand is high. Everything we build with is sold. That is what is driving us to build more and to raise our 2026 CapEx guidance to between $20 and $25 billion, which is up from our prior range of $16 to $20 billion. This increase reflects investments in our 2027 capacity that will come online early next year. We expect these investments to contribute positively to revenue in the first half of 2027, where we already have customer commitments in place. Meta is one such customer. We need to invest to fully realize this. This requires capital, which is our fourth dimension. We're doing a very good job in tapping the market at scale. We raised significant capital this year, more than $6 billion. More than $4 billion of that came from converts and $2 billion from NVIDIA equity investment. This leaves us with a strong cash position of
New
more than
pre-market
$9
high.
billion. More importantly, we have laid the foundation to raise substantially further capital this year. There are a variety of ways for us to do this. There is our recent Meta contract. First, let me just say that we are very proud of our relationship with Meta, and there is tremendous respect between our tech teams. Formally, this is a $27 billion contract with Meta, but in fact, it's worth a lot more for us. This contract alone can unlock billions of dollars of capital for our own multi-tenant cloud at attractive rates that may not otherwise be available to us. On top of this, we also have our first contract with Meta and our Microsoft agreement that will provide additional financing opportunities. Obviously, there are many other untapped options for us to finance our public cloud build-out, from the significant prepayments we get from customers to asset-backed financing of our bare metal contracts to corporate debt and so on. So to close, it has been a great quarter. We're even more focused on what is ahead. We will continue to execute, expanding capacity, building our cloud platform, expanding our customer reach, and financing growth diligently. Everything we build, we sell, and we're still in the very early days. I want to thank our team for the incredible work day after day and night after night, and to thank our shareholders for your continued support. And with that, let me hand it over to Doug.
Thank you, Arkady. Indeed, we are off to a strong start to the year with a number of important achievements. First, we accelerated revenue growth during the quarter. We also significantly expanded our margins, and we strengthened our balance sheet. I will touch on each of these, share some color on our results, and conclude with guidance. Please note that all comparisons are year over year unless noted otherwise. So let's start with our revenue and ARR. In Q1, we grew the group revenue by 684% year on year to $399 million, up 75% from Q4. Once again, we sold out our capacity as demand continued to exceed available supply. Our Nebius AI business, which excludes our consolidated investments in Triple10 and AV-Ride, delivered even stronger results. Revenue grew 841% from last year to $390 million, representing an 82% quarter-over-quarter increase and 98% of group revenue. Growth was driven by capacity scaling and was further supported by strong utilization of pricing. Annualized run rate revenue for our Nebius AI business reached $1.9 billion at the end of March, up over 50% from $1.25 billion in the previous quarter. As we delivered strong top-line growth, we also remained focused on profitability. Group adjusted EBITDA was $130 million compared to $15 million last quarter and compared to a loss of $54 million a year ago. Group adjusted EBITDA margin was 32%, continuing the inflection in Q4 and reflecting operating leverage in our model. Nebius AI business adjusted EBITDA margin expanded to 45%, up from 24% in Q4. This improvement was driven by strong revenue growth. The gap between Group and Nebius margin essentially reflects our investments in AV Ride and Triple10. Both are still early-stage companies and require substantial operating investments as they scale. We expect Nebius to represent the significant majority of Group adjusted EBITDA for the foreseeable future. As mentioned in the past, our intention is to find strategic and financial partners for these businesses and then consolidate them in the future. Net income of $621 million benefited from a valuation adjustment on the back of ClickHouse recent public round. This is a non-cash item that captures the growth in the underlying value of the asset. And now turning to our balance sheet. Since our last call, we have continued to strengthen our financial position. In March, we closed a private offering of convertible senior notes, raising $4.3 billion in gross proceeds at attractive premiums and coupons of 1.25% and 2.60%. In the same month, we announced a $2 billion equity investment from NVIDIA, reinforcing our alignment with one of our key strategic partners. Prepayments from our customers also reached a new quarterly record. Operating cash flow of $2.3 billion was up from an operating cash outflow of $198 million in Q1 last year. The sharp increase was primarily driven by upfront payments from our customers. Together, these sources of capital increased cash and cash equivalents to $9.3 billion at quarter end. Now let's speak about our CapEx. As Arkady mentioned, today we are raising our CapEx expectations to $20 to $25 billion for the year. The expansion of our infrastructure footprint remains one of our highest priorities, given the strength of market demand and customer activity. We are building for 2027 demand, where we have customer commitments already in place. And so we have near-term visibility into future revenue associated with this investment. As always, we will invest in capacity with discipline and rigor, including the capacity we are bringing online in 2026. In terms of how we build and how we'll fund the capacity in the year ahead, we will continue to leverage a diversified range of funding sources. On the debt side, during the past year, we built our ability to take on debt capacity. For example, with our Microsoft contract and our 2 Meta contracts, we expect to unlock the ability to raise significant capital through asset-backed financing. We expect this
Did she
to be
just
at
say
attractive terms based on
CapEx
Microsoft and Meta
$23
credit
billion?
ratings, and will inject this capital into building our cloud business. In addition, we expect to raise corporate-level debt. We plan to start tapping into these financing options in the near term. And on top of that, our financing options include our at-the-market program. We have not utilized this program to date, but we are evaluating it regularly. Obviously, we are very focused on generating prepayments from our current and future customers in order to reduce the capital needed from equity and debt financing. We may also evaluate other financing options, but will ultimately pursue whichever vehicles serve best the long-term interest of the business to support our expected capital spending in 2026. The bottom line is that as of now, given our strong balance sheet and the work we have done putting in place the various long-term contracts, we have laid the foundation to enable us to access a wide range of potential funding sources. And now, turning to our outlook for the year. While it remains early in the year, our strong Q1 performance reinforces our confidence in our annual targets. As such, we are reiterating our full year 2026 guidance for annualized run rate revenue of $7 to $9 billion, group revenue of between $3 and $3.4 billion, and group adjusted EBITDA margin of around 40%. 3 key parameters will determine our growth profile. and margin progression throughout the year: utilization, pricing, and capacity. At present, neither of the first two parameters is limiting our growth. The third, capacity, will play an important role in unlocking our growth potential and driving margin flow through. On utilization, we continue to sell out our capacity, and we expect this to be the case for the foreseeable future due to strong market demand and our healthy pipeline. On pricing, strong market demand is translating into pricing gains in our latest deals. On capacity, the timeline of deploying the new capacity impacts both top and bottom line results from quarter to quarter.
We anticipate a non-linear quarterly adjusted EBITDA margin progression during 2026. We will see this in Q2, given the back-end weighted nature of the capacity we bring online. These investments unlock growth by increasing capacity substantially from Q2 to Q3, leading us to be confident in our adjusted EBITDA margin returning to Q1 levels in Q3 before moving even higher in Q4. Overall, we are confident in our full-year targets. In closing, Q1 was another quarter of rigorous execution across the business. We delivered a strong revenue growth, margin expansion, new business wins, and continued capital discipline. As we look ahead, we will continue to scale rapidly to capture the tremendous market opportunity ahead, while remaining balanced, disciplined, and focused on delivering long-term value for our shareholders. With that, I'll turn the call back over to Gilly for Q&A.
As a reminder, if you would like to ask a question, please click the Ask a Question tab in the top right of the live stream player. Then just type in your question and click Submit.
Thank you, moderator. The first question from our investors on the portal is from Alex Duval at Goldman Sachs. To what extent have you started to see the impact of stronger GPU pricing reflecting in your core AI business? Additionally, is there a way for us to think about the share of older, shorter-term contracts that could benefit from this pricing dynamic? Mark, would you be able to answer this one for us?
Thank you, Alex. We continue to see strong pricing across both old and new GPU generations as demand continues to exceed our available capacity. We just raised prices again in the latest quarter, and we are still selling out across all chip types at the higher prices. We're in a very dynamic market, and we have built a resilient set of processes that allow us to adapt and respond accordingly in any market environment for both new and existing customers. The strength is showing up in a number of ways beyond just price. Contract durations are extending, with the average duration of contracts growing meaningfully over the past few quarters. Also, average contract values continue to increase across new logos and existing accounts, where we're seeing strong expansion as well. And finally, prepayments are becoming more significant. Customers of all types are prepaying in order to lock in future capacity, including the hyperscalers. This improves our working capital position and gives us flexibility around external financing needs. Our go-to-market model is being built to be agile and adapt to the market and yield outcomes that can best help us continue to scale our business.
Thanks, Mark. We have a few questions coming in on CapEx guide and cost inflation. Andre, can you please discuss how much our raise in CapEx was driven by higher capacity growth versus component cost inflation?
Sure. Thanks, Gilly. Well, the increase in this spending is driven by visibility into 2027 and our need to invest ahead of capacity that we expect to bring online. We'll add much more capacity in first half of 2027 than this year, and that requires more CapEx spend in the starting from now in the later part of this year. we have been able to secure sites and power and customer commitments for 2027. And so we are ramping up construction activities accordingly. And in short, the high number reflects confidence in our contracted demand pipeline and our ability to secure the infrastructure to deliver against it. It's not the cost pressure. The impact of the component inflation in our 2026 program was quite material, around low single digit as a percentage of total spend. Also, because we secured a lot of 2026 back in 2025 at the previous price levels.
Thank you, Andre. Next question we have is from James Kisner at Water Tower Research. Nebius said AI cloud adjusted EBITDA margin nearly doubled quarter-over-quarter to 45% in Q1, while you're targeting around 40% for the full year. What's driving the implied step down? Can you walk us through the adjusted EBITDA margin progression for the year? Dado, please.
Yeah, thanks, James. Yeah, indeed. As you saw in the quarter, our Q1 margins were really strong. Nebius AI adjusted EBITDA margin reached 45%, nearly doubling from Q4. And that really reflects the underlying strength of the business. On the one hand side, the demand we are seeing in the market, then the terms that we are also able to negotiate with our contracts, and the unit economics of the platform itself. So as I mentioned earlier, as we move throughout the year, you will see some quarter-to-quarter variability. And I think this is worth taking a moment to explain the dynamic. We have made a number of important investments in the first half of the year. Hiring across go-to-market and engineering, our recent acquisitions, and continued development of new product capabilities. And those investments are already in the cost base today. And we expect them to actually benefit from the business going forward. On the capacity side, our delivery this year is back-end weighted, and we have a meaningful step up coming in Q3. We have very clear visibility into both the investments that we have made and also the capacity that we are bringing online. So really what you are seeing across the quarters is a timing dynamic, not a structural one. The investments land first, and the capacity and the revenue it supports come online shortly after. So given the timing of our investments in Q2 and the timing of the deployment towards the end of the quarter, we actually expect those margins in Q2 to go a little bit lower, returning to Q1 levels in Q3 and stepping even higher in Q4. So for the full year group, we expect a margin around 40% as we have guided. And on the longer term, those dynamics will smooth over time, and our capacity footprint continues to scale, and higher value software solutions will become a larger part of the mix.
Thank you, Dado. The next question is around capacity from Andrew Beal at Arete. Andre, maybe I can come to you here. Can you talk about the timing of capacity additions beginning in Q2 and when you expect key sites such as Pennsylvania to reach full capacity?
Thanks, Gili. So, Andrew, first about the Pennsylvania. Pennsylvania is going to have lights up by the end of 2027 with the first around 250 to 300 megawatts probably. And then this schedule looks like adding 300 megawatts each year up to 1.2 gigawatts in total, actually, and 1.2 according to our power contract we have in our possession by mid-2030 or the beginning of 2030, to be more correct, more precise. But overall, our capacity schedule is just ramping up. This year is heavily towards the second half of the year. Q3 is much is a very significant improvement for us in terms of the capacity going online. Q4 also very significant, and then Q1 next year is where our bigger projects like Alabama and probably the first Missouri will kick in also.
Great, thank you. We'll probably stick with you, Andre, as we have a question from Josh Baer at Morgan Stanley. Can you address the media reports indicating delays at the Vinland, New Jersey site? Understanding you've delivered commitments so far, are there any delays to note for the remainder of the Microsoft contract?
So we delivered all our capacity commitments across our Microsoft and Meta customers. So the first Meta, as we already spoke, I believe the first Meta contract was fully delivered in Q1 this year. The Microsoft contract is way more stretched, and we have the delivery schedule up to the end of this year. We delivered the first tranche in November last year. And so we continue to be in the contract schedule. Again, it ramps up starting from the mid-year, and most of the volumes will be coming in Q3 and Q4.
Great, thank you. So we have had a number of questions around the Meta contract. A question from Alex Platt is, can you provide more details on the recently announced Meta deal? Can you explain how the 15 billion capacity option works? Should we view this as Meta backstopping 15 billion with a set attractive margin? And if you can get a customer with better unit economics on that capacity, will you take that instead? Mark, let me come to you here to walk us through this.
Thank you, Alex. First, I want to say that we love working with Meta, and we're excited that they chose to buy more capacity from us. This expanded new agreement is, to make sure that we all understand this, a 5-year contract for a total of $27 billion, and it is structured in 2 parts. First, there's a $12 billion commitment to dedicated compute capacity with delivery starting in early 27. And then second, as you pointed out, there's another $15 billion of additional capacity that we, at our discretion, can either allocate to Meta or sell to our AI cloud customers as it comes online for the duration of the 5-year contract. Let me explain this in a bit more detail. Meta is committed to buy up to $15 billion of any capacity in these clusters at our option during the entire 5-year contract. This commitment will likely allow us to finance the clusters with asset-backed financing at attractive terms, while selling them to, as I think you pointed out, to our AI cloud customers at potentially higher market prices. The unique combination of being able to sell at a premium, along with the commitment by Meta to purchase any capacity during the contract, should provide us with higher margins, less risk, and more visibility in our revenue. If the market remains strong, we should generate more than the $27 billion in revenue from this great agreement.
Thank you, Mark. We have a question from Alex Duval, Goldman Sachs, about M&A. Could you explain the rationale behind your move to acquire Eigen AI and Clarify? How does this move improve your AI cloud platform capabilities? To what extent does this move mean that you could improve customer stickiness? Roma, I think we'll go to you.
Yeah, thank you, Gili. Thank you, Alex, for the question. First of all, I want to say that we're super excited with these 2 incredible teams of talented people from Eigen and Clarify will join us. And to deep dive in rationale, let's start from foundations. Our view is that we should own the compute stack. That is where our vertical integration, our supply chain depth, and our hardware engineering generate advantage. And it's also the layer that drives the bulk of our economics. Above the compute stack, we built the full cloud solution. And software plays the role of enabler. By the way, we partner where partnership is the right path. And as you see now, we use M&A selectively where it accelerates our roadmap, brings in proven developer adoption, or adds capabilities complementary to what we are building. Acceleration is the key lens we apply to every potential transaction, where we can find rare talent or proven adoption. This is, by the way, the example of Tavidi that has incredible developer adoption that would, in general, take us meaningfully longer to build organically. Acquisition is the fastest path. And we evaluate every potential deal against the clear criteria. Does it deepen customer engagement, increase lifetime value, unlock the new category of the customers or use cases we can address, and in general, strengthen our position as a full stack AI cloud?
Thanks, Roma. We're getting more questions on M&A, so we'll likely stay with you here. Several participants are asking on whether token factory and software more broadly are distinctly different from the infrastructure layer and training. We'd love to get your insights around agentic monetization and the opportunity there.
Yeah, thank you for the question. As I said, we look at the software as an enabler. So it's not that we build the software to generate separate revenue stream. The software, first of all, plays the role of unlocking the new capabilities for us, unlocking the new opportunities in the types of the workloads that are growing on the market and the types of the customers that we can address. Software changes the shape of the customer relationship. Every layer of the software unlocks another group of users and the customers. We want to meet customers where they need us and let them consume our vertically integrated solution in the way that they need, and it might be a different way for different types of the customers. Customers come to our platform for different needs. In essence, they all need to run AI at scale, which means that they need compute. But for example, people who use our multi-tenant cloud, they, to a big extent, come for large training jobs. People who, and these are like research-driven, data scientist-driven workloads. People who come to Token Factory, they build vertical AI integrated, vertical AI products, or apply AI in their enterprises. And they come for the tokens. And moving forward, we'll see new ways to consume infrastructure at scale that will be the agentic, end-to-end agentic workloads.
Thanks, Tal. We have a question from Taliani at Bank of America. How do you plan to finance the additional CapEx, and are you considering disposing some of your non-core holdings? Taro, over to you.
Happy to take this question, Tali. Well, our balance sheet is strong. At the end of the quarter, 9.3 billion of cash and cash equivalents. And this was supported by 2.3 billion of operating cash flow, which was generated in the quarter, right? Mainly, coming from payments from our customers. So currently, more than 90% of the CapEx range that we projected in February is already secured by cash and contractual commitments. The incremental capacity reflected in our raised $20 to $25 billion guidance will be funded through additional financing. And as I have mentioned in previous calls, right? So we have a wide range of sources available to us. On the debt side, we expect to use asset-backed financing against our contracts with Microsoft and Meta. And we may also raise corporate level debt. On the equity side, we have established an at-the-market program from up to 25 million Class A shares. We have not utilized these programs to date, but we are evaluating the program regularly. In any case, as we have done today, we will apply consistent guardrails on cost of capital and shareholder dilution while maintaining a disciplined capital structure.
Thanks, Dado. We have gotten a few questions on pipeline. One from Nehal Chokshi at Northland Capital. Your pipeline is up 3.5 times or quarter over quarter in 1Q26. Does this pipeline include hyperscalers like Meta, like the Meta deal? Can you also provide more details on what this number represents and how likely are you to convert pipeline to revenue? Mark?
Thank you, Gili, and thank you, Nehal. The referenced pipeline growth of 3.5 times a quarter, which 3.5 times quarter over quarter, which we're very proud of, is for our AI cloud business, and it does not include any strategic hyperscaler deals like the Meta deal. It does include qualified opportunities across our core AI cloud and Token Factory products, as well as across all of our key customer segments, including AI natives, software vendors, and enterprises. What we can share about conversion is that we have maintained our solid win rates at the same time as we've accelerated our sales cycles and increased our average selling prices. And you can see this with some of the strong wins that we have, such as Sword Health in healthcare life sciences, and Rhoda and 1X in physical AI, and Core Automation, one of our AI native model builders, as well as Revolut and Monday.com, new customer wins for Token Factory. What we are doing is enabling our go-to-market teams to have a consultative conversation with our customers about their plans and for current and future workloads, including, as an example, what they're thinking about with regard to Vera Rubin's. We're also focusing and scaling our go-to-market and success teams to help customers to realize their plans, which turns into durable revenue for us. Speaking about scaling, by the way, we have a number of recent appointments, including key leaders for the Americas, Dan Lawrence, who is our SVP and GM for the Americas, and John Har, who has joined as GM for Asia Pacific and Japan, and Raja Agrawal, our VP for the Middle East.
Thanks, Mark. Another question that we have from the portal is saying that you emphasize the momentum in your software stack. Where are you seeing the most momentum across the stack today? Why are customers choosing Nebius? Roma, over to you.
Yeah, thank you, Gili. I think it said so many times by different people that now the time of inference, and we see the same. Inference is the fastest growing segment, new segment in our stack. And we see a very lucrative place where Nebius is positioned. We have the winning combination with capacity, and customers need scale. We have the strong software stack, and we invest in-house and with the new announced acquisitions to be on the top performance of supporting the most popular open source models and specialized models. We can provide the best total cost of ownership and like cost of tokens for our customers through the full stack optimization of the stack. And of course, we care a lot about the developer experience. So we think that in a way, we combine the best from different worlds of specialized inference platforms, the scale of AI specialized clouds, the scale of hyperscalers and specialization of AI specialized cloud. So Token Factory is our primary inference product now, and we are seeing good product market fit. If you look on the next layer, on agentic, it's still to be defined what is the final shape of the product and who will be the winners. We expect that Nebius will play the same role of foundation for people to build at scale, and will provide the set of tools and platforms to optimize workloads in agentic world.
Thanks, Roma. We have a question on customer concentration. Mark, how do you think about concentration risk given how large your contracts are with Meta and Microsoft? What does the rest of your revenue base look like in terms of customer diversification?
Thank you, Gili. As a reminder, I think we say this over and over again, but I think it's important to recognize that our priority is our AI cloud business. As such, we are very intentional about how we are pairing these key strategic relationships with the likes of Meta and Microsoft with a diversified core of our AI cloud customer base. We do not take these big strategic deals lightly and only take them when we see terms favorable for our core mission. Again, serving our AI cloud business. We also very diligently capacity plan, and we're always looking to add capacity to best serve our core AI cloud customers, from developers all the way through to enterprises. Our AI cloud business is experiencing strong traction across all of the products that we're offering, as well as customer segments and the verticals that we're chasing. The diversified AI cloud book of business as well gives us both customer and use case visibility that helps to fuel our go-to-market and drives our pipeline and revenue diversification overall.
Thanks, Mark. We have a question from James Kidner at Water Tower Research on the $2 billion investment from NVIDIA and the expanded collaboration on inference and agentic software around Token Factory. What concrete deliverables should we expect over the next few quarters, and does the partnership affect the timing or scale of your Vera Rubin deployment in the second half of 2026? Andre?
Yeah. Okay, Gili. Thanks, James, for the question. So first of all, the NVIDIA strategic investment is meaningful across several dimensions beyond the 2 billion of equity and line of sight to 5 gigawatts of capacity commitment by the end of 2030 that we've done. It really deepens a multi-year partnership with our most important hardware supplier at the moment, when access to GPU supply is a competitive advantage, so to say. We gain differentiated supply chain certainty on the future Rubin, Vera CPUs, and the networking. We also have a close collaboration with NVIDIA for the design and early support of the future SKUs. As of today, this is Vera Rubins and Vera CPU platforms. And we are able actually to have a early deployment and support on our cloud platform as soon as they will be publicly available. Again, it reinforces our position as a preferred builder of AI infrastructure and aligns our roadmap with the NVIDIA product cycle, which is very critical for the pricing and the performance and the utilization and just leadership overall. We are also expanding our software integration. Our announcement around physical AI is one example, and we are very, very excited about our partnership driving vertical specific advancements. We are also partnering with them to build software for inference and agentic part, and just recently achieved NVIDIA exemplary cloud status on GB300 for training. We are very much among the first cloud providers globally to receive for all the NVIDIA generation where this status is available. Yeah, that's it.
Thanks, Andre. Mark, maybe this one for you on a question from the portal. Some of your competitors have mentioned they are sold out for most of 2026 and even into 2027. If you are future selling, how much of your future capacity is sold out for this year and next?
Thank you, Gili. Yeah, first of all, we are sold out again in Q1, as we have for several quarters as demand continues to significantly exceed available capacity. The vast majority of capacity coming online over the next several quarters to 12 months is already under contract or earmarked for our AI cloud customers. We do retain a portion of capacity for self-service to serve those AI builders that Roman mentioned earlier, and then we proactively manage those allocations to keep the segment supplied as demand evolves. Separately, we are typically seeing 4 or more customers competing for every GPU we bring online. We have significant expansion plan for 2027, including Vera Rubin's, and we'll start selling that capacity as we move into the second half of this year.
Thank you, Mark. We also have a question on U.S. data center opposition. Tom, can you touch on some of the political opposition here in the U.S. related to data center construction?
Yeah, for sure, Gili. I mean, so definitely this is a big topic. It's something that, we pay a lot of attention to. But overall, I think what I would say is that the approach that we've taken so far, we found to be quite effective. And I would basically say there's a few sort of components of that approach and how we think about this. Number one, I think, first of all, not all companies that build data centers build in the same way. We're not all alike. And I think you've heard Andre and team, talk about how we build the efficiencies that we're able to achieve, what we do around creating these, interesting technological ways of heat reuse and so on and so forth. So we build very efficiently, very effectively. And I think that's an important part of our story and what we talk about when we come into new regions. But of course, that's not enough. I think that, we also, the second thing is that we take a very transparent approach to what we do and how we talk about ourselves. I think that's not something that's necessarily universal in our industry, but it's from the very beginning when we're looking at a site and we're engaging, it's very clear who we are. We engage very actively in communities and talking about what our plans are, what we do, how we build, how we contribute. You can see us showing up at community town hall meetings, or I'm looking actually right now at Andrei Karanenko across the table in Amsterdam, who's just flown in from our event in Independence, Missouri yesterday, where we were engaging with the local government and communities. So we try and just be very clear and transparent about what we do, how we do, and what the benefit that it brings. And I think the last thing is that, look, when we come into a new region to build, we don't just build and then move on to the next city. These are long-term investments. And so therefore we have to look at these relationships with communities as long-term partnerships and relationships. So we think very much beyond what we do in terms of the building, but where else we can contribute through it, whether it's through our Nebius Academy, academic offerings, working with local universities, helping to train, reskill, retool, and so on. So we view this very much holistically as a long-term partnership. And so far, we found that this approach resonates well, but there's no room for complacency here. So, we continue to pay attention and make sure that we're doing the best we can to be a positive contributor to the local ecosystems.
This concludes today's call. Thank you everyone for joining. You may now disconnect.
All right. So we had a few things come in. We had a few things come in while that call was going on. And I'm not so sure how to interpret this. So it was a good call. But I think things kind of turn a little bit south. I mean, mind you, we're still up like 15% pre-market. I think things kind of turn sour when they mentioned the $20 to $23 billion CapEx guide. I didn't see that coming. It was originally $18 billion, but now it increased by like 25%, which is a lot, Still, you know, we're still up. We're still up like 15% pre-market. The market cooled off a bit because CPI came in hot. In fact, the market gave up a pretty good amount of gains. SPY is now red pre-market. The Qs is giving up a lot of gains, 60 basis points worth of gains pre-market. NVIDIA is still up 1.5%, but it was at 226. And it's basically this that did it. Right here. So that did it. That did it. 100% that did it. And the market doesn't like it. Still, you know, I think that I think the market looked past that when it came to the CPI report yesterday. I don't think it's too much to worry about. But, you know, the market needs to ingest this news. We were much higher pre-market, but now we're not as high anymore. But, you know, I do think that this is pretty obvious with oil at $102. Like, come on. Of course, PPI is going to be high. But it did come higher than expected. So the market is definitely taking that into consideration. Anyways, guys, I'm going to get some sleep. Really appreciate you guys tuning in. Nebius is still up 15.6% pre-market, and that is still good news, guys. Do not worry about that. Yeah, I think that's pretty much it. Thank you very much, guys. Talk to you later. Oh, by the way, there's not going to be a stream later.